Hello and welcome to Markets at Noon with me, Ankur Mishra and Mansi Dave. And a day of greens where Nifty has celebrated the birthday cake of 25,000. We have touched that. And nothing much in red today, barring FMCG and auto. So all in all, it is a kind of a start one would like before the festive season begins. And more importantly, the downside risks are limited ever since there is born home between Prime Minister Narendra Modi and US President Donald Trump.
Friendship it is, Ankur. And yes, it's all green in the market. Street is eyeing the tariff relief, and let's see what happens and the negotiations and some sort of good outcomes from the tariff scenarios. But at present, 25,000, an important level which the street was anticipating eyeing. And after 25,000, 25,200, 250 are the levels which we are watching out for. Right now, 24,979, but we have seen those 25,000 levels, 110 points up move on Nifty. Take a look at Bank Nifty also, because it did take a back seat, a breather for good few sessions, and now again back in action around 380 points, 54,596. The broader markets are also doing their job. And talking about the contributors, Infosys, TCS, Axis Bank, SBI, HCL Technologies, the IT sector has made a comeback, and we have to discuss this at large with our experts also, whether how much confidence do we see on this comeback. And on the flip side, if you see, it's M&M, Maruti, Bajaj Auto, Tata Motors, Hero MotoCorp. After a good run up, the automobile sector has taken a short breather, is what we can say. But then let's talk about the market and how do we strategize these markets at present. And we have with us Rohit Srivastava, founder of Strike Money Analytics and India Charts. Rohit, thank you so much for giving your time to ET Now. Pleasure talking to you this afternoon. Tell us, how do you sense the market and the latest developments that are ongoing?
No, it's pretty good. We've seen a lot of bad news get discounted in the market in the recent correction that we've seen since June. And that puts us in a very, very good position because we are making a bottom now at a much higher level, 24,400 compared to where we were in April at, 21,700. So when you make a higher bottom, what you start looking for is the next higher top. And we'll keep getting confirmation of that as we surpass individual levels. The first level we look at is getting past 25,000, which we are attempting to do today. Once we have done that, some people may be even watching 25,200 because that's a 61% retracement of the correction that we've seen since June. And above that, I think very clearly we should start anticipating new highs in the market over the coming months. So going past 25, 600, 700 should not be a big deal. The only thing is keep some time horizon. I think I'm calling this the year-end rally that may be in very, very early stages of starting. Even if there are any short-term pullbacks, we will look at it as very good buying opportunities with the idea that, by December, we are going to be in a much better place than where we are right now. So that is the overall picture. And we will keep getting, signals level by level. Let me also cover levels for Bank Nifty. Bank Nifty is lagged behind. In fact, it fell much more than Nifty in the month of August. But now as it's attempting to come back, we want it to close above 54,680 or 690, let's say. So once we're above 54,690, I think it could be on the way to 56,000 in the coming weeks or days. And eventually, again, here, I will say that the attempt should be to go back to new highs by the end of the year.
Right, Rohit, one more comeback has happened in the market today is with IT sector. You would have seen that is leading the pack today. In fact, so what is your recommendation in this sector?
So there are two ways to look at it. One is you have retraced 80% of the recent, gains in this sell-off. The gains that we made, from the April low to the high that we made sometime in June. And having done that, now we are starting to see some positive momentum since yesterday itself. I think in the tech stocks, and some of it is coming on the idea that maybe there won't be any significant further action on India, specifically on the services side, which people had been fearing. Having said that, the IT sector faces many other headwinds, whether it's from AI technology, whether we are able to keep up pricing, and always the overhang that US may do something on the labor side, which can impact this business. So therefore, as a long-term investor, I've typically avoided the IT sector over several years, but it does provide a trading opportunity over here. I can't rule out that the Nifty IT index goes back to a 40,000 in the coming weeks. So there may be a trade, but longer term, I think there are other places where we would want to be invested.
can see something on a positional basis, but not immediately, at least as far as the IT sector is concerned. And yes, it has a connecting touch from the global market as well. So we have to take that into consideration again as well. Thank you so much, Rohit, for all your views on the markets and giving your analysis and helping our viewers navigate and strategize the market. Thanks a lot.
Thank you.
Moving